Alrighty, everyone. How's everybody doing? I like the jokes already running in the chat. Well, we'll see about that. So, okay, let's get into things because we don't have a lot of time today. Let's cover our usual suspects and maybe we'll get some extra time to cover some tickers. I hope everybody's doing well. Getting ready into the weekend. It's sadly Leo gave it away. It's more so a nothing burger than anything else. We have seen a substantial movement to the downside, and since today we've done pretty much nothing. We stayed within that lower range. We were not able to fully close the gap. Just about, what is that? Less than $10 left, in fact, to the gap. Arguably, I would say that we still can close the gap very easily. I mean, looking at this momentum, even in the 1 minute, we can literally establish the closure of this gap within the following, I would say, 20, 30, maybe 40 minutes. What was that? What we have? About 40 minutes. So, yeah, give or take, we can easily close that gap. But that also means we spent the whole day on generating I wouldn't call it a substantial gap, but a gap, and then spend the whole day closing it. Basically, that is kind of what it was throughout the day. So let's look at what we can see, on upcoming time frames. That will give us a little bit better perception on tomorrow. As tomorrow is Friday, we finalize the week. So let's see what it is that is in store for us. We objectively can see it from the 5 minutes that we can easily test 59.09 and maybe slightly right above it, given this wedge formation that's starting to be generated right here. Not going to be surprised if we're going to end up testing that area, and that exactly gives us the exhaustion of this momentum, bullish momentum that we're supposedly having, at least for the temporary time, which in the context of the bigger picture, of course, it's more bearish than bullish. This is more of a corrective movement, but that's still something that we can see. What else? At face value, 30 minutes is bullish, going for convergence of the forces. We know that means we're potentially gonna see loss of bullish momentum. In other words, what would be interpreted as a bearish momentum almost, but rather on this end of things, it's gonna be a little bit more, just simply gonna be bullish but tamed down, giving us exactly that 59.09 vicinity and maybe that potential wedge that we said that we are testing. So that is between today and the beginning of tomorrow, I would argue, just kind of in the upcoming hours. Maybe it also very much depends on what kind of price action we're going to have overnight and pre-market tomorrow, and what sort of gap it will open up, and whether we're going to have to spend more time right going into the weekend, let alone the fact of the matter that we have basically less, I think it's now around the six trading days left all in all from this month. So it's not all that surprising that we're kind of just slugging our way forward post this very bearish movement and now just kind of stuck. So it's not all that surprising. I'll get to the chat in a second, boys and girls. This more so indicates that upwards movement that we're seeing. Why? Because as you can see, we're below the channel. Okay, very significantly so. It's very much probable for the market to find support on the nearest support in this instance. Again, that's 59.09, and coincidentally giving us a very similar sort of wedge formation that we had on the smaller time frames, which is again sort of bringing us up, down, maybe up, down, sort of wasting and spending that leftover bullish momentum we have in the system, especially on the hourly. So even though it's bullish, it's not really bullish. It is very short-term bullish in that sense, that more so sideways with the potential, more so sideways, if anything, with some inkling up to the upside based upon our current location, but all in all, it's not that significant. 4 hours. 4 hours is actually rather bearish. We have to be objective about this. At face value, we're rather bearish, but we got to acknowledge that we've been spending some time in oversold territory and basically in bearish territory, which represented this movement, which we will probably need to see some form of consolidation, at least temporary. That was I shouldn't have moved that. At least even if temporarily so, which we are probably, that's what we're seeing right now, that very consolidation right now in this region around the 58, call it 59, 58, high 58s, and well, low 59s, if you will, to keep it simple. Projection currently is to close the gap, which we spoke about. That's 58, 155, 54, kind of. That's the vicinity what we're expected to see in the upcoming days. And even if we're going to start picking back up bullish momentum, which is very unlikely given the fact of the matter that we are in oversold territory, it's very, very probable that we will see more of that bearish momentum, even if a tiny bit so, before we actually pick back up for some retest, which I've actually mentioned before. What was it, like a couple of days ago, that we still can actually end up testing 6,000. That is definitely a possibility, seeing price action sort of creating this, for example, wedge. There are various scenarios in which we can actually see a little bit more bullish momentum. It doesn't mean it's going to be retained over the longer period. Now let's look at the daily. The daily is actually very indicative. Mr. Dom, beware of wash sell rule. Yes, very correct. You need to remember, guys, if you sell and you plan to jump back in, like, consider the wash sell rule. So bed and breakfast, or bread and something in the UK. So yeah, consider that. That's actually very, very, very important. So daily at face value is actually very bearish, right? So actually very bearish, given how we accelerated so low so rapidly without any retests. We did see an attempt for convergence right there, for bullish momentum to take dominance, but really didn't give way yet. We do expect it to happen rather shortly. So maybe right going into the weekend and probably into next week. So we're going to see some restabilizing on this front of things, and maybe a little bit of a pickup right back to retest that a lower support we have on a shorter range. You can see the diagonal yellow line we're having right here, which was part of the thesis that we can actually make it all the way to 60, what appears to be as around 6,300. To be frank, with slippage, in fact, I mean, screw it, it's 6,307, so maybe even 6,310, right? So those are still possible. Assessing that potential within the following upcoming days, we will truly see some form of Santa rally, which will end up basically giving us that potential momentum that we saw earlier before. Is that completely off the table? Let's see, again, the larger time frame, whether the larger time frame says that it's no longer a possibility. So let's see one larger time frame. Larger time frame. That'll be nice. Larger time frame. Larger time frame. Thank you. Took you a bit of time. So larger time frame, which is actually weekly, and something we've been speaking about throughout last weekend, well, for some time now, and I've been warning, look, this is very abnormal. You can see almost the gradual process of how this wave was the major wave. We spent most of the time in overbought territory. Smaller wave, lesser time in overbought territory, giving us less of that acceleration momentum on the top side, giving us a shorter wave, shorter period. And this very third final one that is completely is not truly able to break through the 80 range, and already starting to show signs of weakness. These signs of weakness will probably show themselves in the market by the continuation of the downside price action. If you remember, I've done this red circle just recently, and I said, if we're not going to go for that acceleration and completion of this upside wave, we will probably end up breaking down into that wonderful red bubble. And you can see now that we're starting to get closer and closer and closer, considering the fact of the matter that we basically have only one candlestick left from this one going forward. If this assessment will be correct, there's high probability that we'll see that very next week potentially slide into that area that I've assessed around 56.95, through which we will close various gaps on the way down. So at least it will give us some comfort that we've now have a lot less chores to make, and via that process we'll actually end up making it all the way to the bottom of the shorter range, quicker pace weekly channel, right, which you can see again, the yellow line right here. You can see it through the noise. I hope you can. And that very channel coincidentally coincides with my bubble here that I've mentioned based upon momentum, what I assess that we will see very shortly. So if that is what we assess to see within the upcoming sessions, basically, based upon this, this also makes a lot more sense given a very viable support or resistance level. So that's what we have on the weekly. Now let's look at the monthly. Let's look at the monthly real quick. I'm sorry, pardon me for this taking so long. Give me a second. Here. Now we can see the larger form of the channel, right? That we are basically at the top of. And I'll show you something that might put you at unease in a second. I'm sorry, but that's the reality. So we can see we've been testing this channel right here. This is the first month that we've actually ended up testing the upper limit of this channel, right? That was right here. That was basically October. Right here we got November, and this is December. So during these 3 months, arguably, we ended up testing this median process. Now I want you to pay attention. Last time we've been median top resistance, pardon me. So I want you to pay attention last time when we've been around that resistance. Wink wink, you know that resistance very, very well. That was January 22nd. What really happened during this process, if you ask my assessment, is that the Fed were able to create conditions that instead of finalizing this process quicker than expected, if those of you, some of you remember, my highest high expected was around 5,400. You see on that potential trajectory, that is roughly where we would have ended up. The conditions ended up being so that the process got prolonged. The can got kicked down the road. We ended up testing the median and subsequently to the top channel. So we did exactly as expected, it's just that we did it so much slower that by the time that we ended up actually reaching the top end of the channel, that end roughly is sitting at around 59 or 6,000 really. 5,900 or 6,000. So last time when we've ended up testing that channel, you can argue, well, that was a coincidence and all this is artificial. Well, I will tell you that we've been in this channel for a very, very long time, right? Far prior to us having any expectation with what was to come around 2019. So this is not artificial and was predicted far before we actually ended up testing that limit, which also, amusingly enough, we ended up prolonging. Instead of going on a far quicker trajectory, it took us far longer than expected. And again, similar sort of scenario. Last time around, when we ended up around this channel, we ended up testing it, wink wink, coincidentally, 1, 2, 3. So as you can see, we ended up testing it a very similar period of time to what we have been recently, right before a correction has been initiated. Also, we coincidentally had very similar conditions. We've been in overbought conditions for a long time and ready to overturn. If we look at current conditions, right now we actually spent far longer in overbought conditions than we normally would. In fact, we had 3 consecutive impulses, right? And you can see that this is somewhat, even if we can argue not completely excessive, but somewhat still abnormal in terms of time of duration within the overbought territory, giving us far more of an abnormal acceleration process than we usually would have in a healthy market, right? Almost as if it was artificial. Wink, wink. Now, so what we're seeing here is basically that the grand scheme of things, the big picture, is actually starting to overturn. Let's see if we have any signs here that, no, that's just the black. Yeah, that's just the black line and the overlaying over the yellow line. So nothing really abnormal right there. It is exactly the convergence divergence that you're seeing, but this is already starting to hint at upcoming pain. We know that doesn't come through immediately, but we are starting, again, as Tom here likes to say, we're done, and I absolutely agree with that quote, and I love it myself. You're getting closer to the sea. You don't necessarily see it, but you can smell it. So what we're starting to smell here is not good. Again, based upon previous market behavior, this is a point of worry. Okay. Now, now, let's quickly run through things. Nothing burger today, as Leo said. So all in all, it is a nothing burger, but it is starting to smell very badly. If we want to look, for example, at Palantir, which I've given a prediction that actually may make it to the $100. Right now is actually very much struggling and appears to be that it is losing momentum so rapidly based upon the weight that is being pushed upon it from the overall indices. So it is not capable, even though it still has some bullish momentum in the system. Right here, let me show you, just to keep it more as you're accustomed to seeing it. And like that will make a little more sense to you right there. So you can see what we really are doing is actually something similar to what I've sort of given you a hint potentially that we will see. Is you see the most of the price action is kind of stuck within that wedge formation right now. Of course, we have some exceptions. Slippage, the market does misbehave at times. Does that mean we're not within that channel? No, not at all. What still is surprising is, of course, this channel is being maintained and retained because we're still, although on the lower end of the channel, we can potentially still, before the end of the year, make it to 85. And given, well, again, we're not going to trade all the way to the left end. As you see, it's the 85 area. And giving it a good day, potentially something akin to this, we can actually still see the stock make it to 90. Should you do this? I don't know. That's up to you. This is not financial advice. Don't make me bring the screen again, right? You do you. What we're seeing objectively on the screen right now, if you didn't miss it, is this thing. And I mean, it is somewhat indicative and similar to what we saw. There is some bullish momentum, or at least if the indices are able to retain sideways price action, it's not out of the realm of possibility seeing an individual asset such as Palantir actually appreciate in value. And on a good day, on a pseudo Christmas rally, or just based on, expectation and hope based upon how far the stock rallied already with some correction and some FOMO, you can easily make it to 90. It's not out of the realm of possibility. How probable this is? I would give it a 50-50 at this point. It's very, very sketchy, and honestly, it's not something I would personally choose to participate unless I really am doing this with almost money I in advance expect and perceive as already being lost, right? If I would do that, which I'm clearly saying I'm not doing that, just to be clear. Why? Because if we go further out, we say we're doing this wedge, right? Very similar formation, not all that surprising. So, and we're seeing more bearish momentum on larger time frame. This is far more indicative that instead of moving to the upside and retesting this, we might actually still move to the downside. While does that not completely contradict the possibility of a correction, which now becomes a lot shorter, right? Requires a lot less to actually make it. And then through that, as I said, make it close enough to potentially retest these 80s and maybe even lower 80s. Let's call them lower 80s with slippage let's call it 85. So we know all these things are very, very possible given this example and many other examples. This is just the current one, right? So you see slippage is a very normal occurrence in the market, even though, pardon me, we have very defined channels. the market still is very dynamic, if you will, and still there's a way how it moves in and out of these channels. And so, again, this is part of the sort of idea, is the ability to recognize whether we're going to retain or not retain the channel based upon the technical tools we use. That's kind of it. Nothing really changed on the weekly. I mean, it looks like, yeah, very worrying. Not yet breaking altogether, but worrying, and amusingly enough, still at face value bullish and in overbought territory, so not all that bad. That is Palantir for you. So starting to smell, but is it dead already? No, it's not. And in fact, it might revive for a final last bite and bite your hand off. So be very, very careful. Again, you do you. This is not financial advice. But in my personal humble opinion, it's a very risky thing to participate in. So, of course, remember, we're all big boys and big girls here. And if you decide to participate in such a thing, it's up to you. Make sure you have what it takes, the cojones, to withstand the potential pain. Wait, but I missed something. No, I haven't missed anything. Surprise sticker, you check for me. I was Johnny. I don't know if we have time because we're gonna have to run soon because we have Tom's members Zoom. First of all, I'm a member and I'm a friend, and I want to participate, and I hope you forgive me. And in fact, I wasn't sure whether it was going to go live, schedule things, and all this and that. In fact, just because Tom freed up the spot, I was able then to go live. So, just saying. Michalis. Hello, Michael. How are you doing, my friend Johnny? I was right. Well, that was that remark. Give some love to the like. Yeah, I agree. Give some love to the like. Damian, any concerns on tax loss harvesting? Right, that's why Tom commented, beware of wash rule, Damian. Right. Bad Wars gang, good to see you. I hope you're in good mood today. Hey Greg, can you look into fuel cell and EXC after you done with the daily stuff? I still want to go over Tesla and Nvidia, and we are short on time. I rather not, Mike. If you don't mind, jump in to Discord. I don't know if today, because today we have a lot more stuff planned, but definitely tomorrow morning, feel free to jump in and ask me to take a look, and I'll definitely, all of you boys and girls, today I'm sorry we're short on time, but I'll be more than happy to check out your individual assets. As you know, that's part of the community, benefits. So definitely join in. Don't miss out on this. Another important thing, really, really important, and I really don't mind, but just I want you boys and girls to know that the cheapest price I will have for my academy is currently ongoing, right? It is right here. This promotion will be going until the end of the year, right? Or until I fill up these 4 spots, which, by the way, because we have the holidays, don't really wait for the last minute. Sign up for the academy because right now it's 20% off. It's not going to get any cheaper. In fact, it might get more expensive next year. Guys, I put my heart and soul into the academy. You can ask my students. There's a lot of good, valuable knowledge there to learn to truly understand how to measure and perceive the market, its various behaviors, correlations, tools, all of it. One-on-one guidance. You'll not get anything like this anywhere at nothing of this price. Don't miss out because, again, I'm a man of my word. Once the year runs out, it's just going to go higher and potentially even higher than that 2,500. So right now at 2,000, it's basically a bargain. Don't miss out. Most of the members have already joined, by the way, Patreon and our Patreon members. Don't miss out. Again, Patreon also very important. You can get it now at only $8.50 for every month instead of paying monthly. You can pay annually. In this way, you get basically a 15% discount on the Patreon. There's that. Don't miss out. Otherwise, again, next year prices are going to be different, and the founding members that will be locked in for life at this 10 or 8.5 dollars per month will never come again. Once locked and finalized, this tier will be gone. These will be the founding members. They'll have the founders membership sort of medal, if you will, that will give you some prestige and maybe potentially some perks in the future. It's kind of important, so I'll know who was that by my side that I was just starting the community. Yes, Bad Wars Gang, we're actually going to check Tesla. This is amongst the things our staples, if you know, so that's where I'm about to close off of on will be Tesla. So that's about 5 from top. Closing November 5th, gap next week. That's about 5% from top. I see what you're saying. Yeah, give or take. Yes, 1 second. Greg Tinker request. Yes, boys, that's it. The last ticker we're gonna do today is Tesla. And yeah, we're just gonna do Tesla today. And that's it. And we're going to close on Tesla, and everybody else will have to, talk to me on Discord, and we'll do it there. For likes. Yeah, likes will be appreciated. I promise they're free. They don't bite. So, I mean, yeah, definitely. By the way, the way to sign up to the Academy, don't look for it on Patreon, is just straight up DM me, direct message me on Discord. We're going to have a bit of a call, and that's the only way you sign up. Don't look for that tier on the Patreon. It does not exist there. The only way to sign up to the One-on-One Academy is directly through me, with a one-on-one call when we can hear each other and understand that we both like what it is that I'm offering, and schedule and all that beautiful stuff. Useless, thank you. You're such a beautiful man. You're such a beautiful soul. Why do you use that horrible nickname, man? You just frustrate me every time I see this nickname. One day I'll make you have a normal nickname. No problem if you have time tomorrow. Talk on Discord. Yeah, absolutely. We're gonna do tomorrow, and I'm glad to hear Bad Words. I'm very glad to hear you're feeling better. And on that note, let's continue to Tesla. Let's check it out. Well, Tesla, all in all, I got to say, kind of a nothing burger. All in all, again, we've kind of slit into this sideways area, right, yesterday, and we didn't really slide out. We've ended up retesting this throughout night, kind of dropping lower. It's not accurate. If anything, it's more like this. This is slippage, if anything. So let me remove that one. I cannot draw a straight line to save my own life, so let's just pretend that's the line instead. Right, here we go. Just kind of like that. And really, it's not all that surprising. We've tested this channel before. We've been in and out. It's not all that surprising. That's sort of normal behavior. But it is starting to look like a lot more weakness is starting to seep into Tesla. Like, for example, let's look at 5 minutes, already starting to look bullish, right? That is an indication for either overnight, if actually expressed in the price action, or either mostly tomorrow morning. We saw that the price action on the S&P itself is not all that promising. In other words, that kind of makes sense and plays well hand in hand. 30 minutes, a little bit more bullish, but not all that perfect. It is a bit stuttery based upon this and based upon this. I would argue that this is probably pointing towards that median. That median sits roughly at around 440. 440 is rather close, it appears to be, but if you're attentive and you realize that it's close, but close enough for you to squeeze the leftover of that momentum, simply because you don't just have to move from pardon me, from this very location to this location, but rather from this to this. And so this very bullish momentum can be actually spent on retesting this area, potentially again sort of finding support or resistance on our nearest median on this shorter range channel, right? So we can clearly see how there could be a retest towards 40 400 and 440-ish, let's call it 440, right? 441 even. But does that seem all that promising? As if it can go above that? It doesn't seem like it. It seems as if that's kind of the limit for this week. I would argue the limit for this week is roughly about that 440 based upon this momentum. Maybe we will have a little bit more positive momentum next week, but it does not appear that this week, basically tomorrow, during Friday, we'll have anything substantial enough, significantly more larger than this 440 area. Now, 45 minutes. 45 minutes starting to smell. It's starting to have some stuttering, right? Some farties. That means it's not straightforward, smooth, and might have issues. This might overturn, but let's follow up on this tomorrow. Right now, it's sketchy, so let's follow. Let's look at this based upon. This is a middle ground between 30 and an hour. So again, let's just flip to an hour, see what hour shows. Hour is already negative, while in reality we saw some positivity in a smaller time frame. So is it going to be all that surprising if we're going to have another retest towards that 414 and potentially another retest upside, right, based upon this movement, if we're going to have some more bullish momentum to squeeze, if at all, which gives us coincidentally what? 440 again. You see, so even that process, whether we do drop down, it basically shows that we're slowly transitioned to what appears to be this is the cap, the head, if you will, right? And we're potentially going to have here some form of shoulders, so giving us some form of head and shoulders. And so this appears to be that we're far more likely to move towards 414 rather than stay within the vicinity of, even though if we will test it a little bit, right, it still shows on the grand scheme of things that we're far more likely sooner than later to move towards 414.50, which I would argue probably going to be very much intertwined with potential retest of that 410, given that this is a round, neat number, and a psychological level is probably going to be retested like that. Alrighty, cool beans. 4 hours. 4 hours is already bearish, which it has been. I think yesterday nothing really changed on the 4 hourly side of things. If we look at the 4 hourly channel, we realize the same old story. We are relatively high, kind of in the center of the channel. So given this lower edge squeezing out more bearish momentum, we can kind of make it to 415, 410, same levels, you see, which is the bottom of the channel, coincidentally. They all so on both ends, several time frames are pointing to the same supports and resistances. Subsequently, not surprisingly, daily, although we'll probably slip into next week, we're not going to have too much price action on this side of things. And even if we will have some expression of this downwards price action, it will probably come in form of 414 or 410 that we already just mentioned a second ago. So no matter what angle we look from, we come up again with the same supports and the same resistances. Here, this one is slightly higher, right? You got like call it 450. But I can see how slippage from 440 is 450, right? That is actually not an abnormality, but some would maybe confuse it as a retention of the upwards movement. As so, in reality, it's just a continuation or a beginning of this expression of the or visual form of the downwards price action. We have that. Weekly is burning hot, still cool, so that's why you have some of that bullish momentum to be expressed. We'll see how much this will be pushed down based upon momentum from the indices. So this is not strong upwards, but it's definitely not done yet. It appears to be that even if we're going to have some correction to the downside, we shouldn't be too surprised if we're going to see another pullback up towards that 440. Again, as we said, it's not going to be all that weird to see down, up, down, right? So, or at least down, up, down, back to 414. That is the expression of this. Why? What are we seeing here? Again, is that we are bullish on bullish. We're bullish in overbought territory. So that's rather strong, but we've been at it for some time now, so we shouldn't be too surprised if well, sooner or later, we're going to run out of momentum and start falling back to the ground. And as we see this momentum, this candlestick, its structure and all that bullish momentum that had to be eaten away to show that the bears actually, well, basically to complete the bearish momentum, the bearish movement is significant. In other words, the bears were able to eat away at all the bulls were able to pull off and then some. So for now, if being retained for one more day just to complete this week will actually appear to be more negative than bullish, right? But that depends on how we'll continue next week. We know next week might become very problematic with Tesla. Why? Because we saw all the interference and noise in the smaller time frames, and so not surprising if we're going to see something similar start occurring on here on the monthly, and also slipping from the indices, so the larger forces in the market. And we have to remind ourselves that although we're having right now temporary relief, we still are in oversold conditions, and so it's not going to be all that surprising hitting back off of the 20, getting oversold conditions. And so within the quarterly time frame, we're not going to be surprised to see a deeper correction. The first stage of will be 328.32 on the lower end, beyond the 414, 410, 400 flat, 350, which we have here as well. Don't neglect that. And only then 328.32, sorry. But based upon what we're potentially seeing here, this is what is laid out in front of us for the near-term future. You can see these processes can be very prolonged and take quite a substantial amount of time, up to 1,644 days, and they don't have to be identical. And so, yeah, a lot of pain ahead. That's it, boys and girls. I think we've done today as expected. We've covered S&P, Palantir, and Tesla. And now I wish you all a wonderful evening. And I would stay for a little bit more niceness and niceties and all that beautiful stuff. But we need to run to Tom's members Zoom. I'll see all the members there. Welcome, by the way, to all my new members that get to watch this. I'm sorry if I've neglected to mention anybody. Murat, hi to you. Damien, we said hello. Bedwars Gang, Casey, Alan, of course, Mike, Johnny, of course, Tom, that's probably already not here and getting ready for his live. And so, boys and girls, love you much. I see you on Tom's Zoom call and hopefully in my Discord. Wish you all a wonderful evening. See you all there. Bye for now.